Thank you very much, and good morning, everyone. Let me recognize Peter Simon Karaoke, who is the chair of Daraja Microfinance, and Wycliffe Mwanzia Muhangiro, who is the chief executive officer of Daraja Microfinance, and members of the board that we showed, members who are present here, shareholders, and also my colleagues from the central bank and the totality of those who are in favor of microfinance. Let me say that financial sector in Kenya is really has come a long way. This for me is great joy that we have come up with Daraja Microfinance, which is community-based. And we always say we have to make a distinction. Community-based because it's defined sections that have identified. And there is also the nationwide microfinance banks. It means that they can serve the whole nation. The difference is that you have a targeted market that you can work for, and also you have identified your specific clients. So let me say that at the outset, it's very, very important that Daraja has decided to cover its own market niche. And in the spirit of their own entrepreneurial spirit, they have targeted that market and they are going to satisfy that market. So essentially, it is to see their vision translate into the actionable points that they would like to have. And that is why we always, at the central bank, make sure that we understand the business model that you're going to promote as microfinance. So I'm grateful for the shareholders, for the board of Daraja Finance, and the management for this fate, and also inviting me to usher in this new microfinance. As the chairman mentioned, is the 10th. So we can imagine we didn't start very far with deposit-taking microfinance. Ladies and gentlemen, Daraja's licensing as a community-based microfinance bank that was done in January 2015 has brought the number of microfinance banks in Kenya to 10. And of course, because Bwana had mentioned about financial inclusion, it is a recognition that when you're living in segmented markets, you always have to understand that there are segments of the market that you have to target. And those segments are also very, very specific or very sensitive in terms of how delivery of financial services takes place. So in a sense, if you don't want to leave any segment of the market behind, then it means that you have to understand how that segment responds to financial services that come to them and how they utilize that service. And secondly, becoming community-based means that you have a target market niche that you are looking at. And here, for me, I'm looking at micro and small enterprises. And that is where this market segment requires a very personalized service and may be offered by larger financial institutions, but it may not satisfy that segment of the market. So for us, that's a very important aspect to understand and to underscore. The second thing is that formalization of microfinance started in 2006 when the Act was passed, but the central bank was empowered to license microfinance institutions in 2008. And of course, if you're a deposit-taking institution in Kenya, then it means that the central bank has to come in to regulate and to protect those deposits. And that's how we come in. But since then, when we licensed the first microfinance institution in 2009, in May 2009, my argument was that if you want to have capacity to grow and serve the market segment that you are targeting, then it means that you have to collect deposits to give you that capacity. And that is why we are very proud of the microfinance institutions that have given us that room. I think that's why we have Kenya Women Finance Trust, which is covering the whole country. Network, the Mwangi Githaiga, you've been a good example, and many others. And this is the 10th one that we've done. We are actually celebrating in opening. For us, it's very, very important that we have different market segments, and if you don't recognize those segments, then you cannot develop financial sector. We have seen that remarkable development. Let me give you, for you to understand that it has been quite an achievement. Since 2009, microfinance banks have grown to have a total of the 9 microfinance, and this is the 10th one, they have grown to with a total of 97 branches, and they have 74 marketing offices and 67 marketing agents. And in terms of total deposits, at the end of 2014, that is the December last year, the microfinance banking industry had a total deposits of 35.4 billion, which is an increase of about 348% if you compare with 2010, which was 7.9 billion. The total loans outstanding were 39.8 billion, which was an increase of 154%, looking at 2010 as the base year, where they had increased from 15.7 billion. So that is, those indicators are actually to tell you that there is massive market here waiting to be discovered. But it can only be discovered if you understand the market structure, if you understand the target market that you need to look at, and also if you understand the characteristics of your clients. And that is why we are very passionate about preaching financial inclusion, preaching what financial infrastructure is all about. Completing the financial infrastructure is what is going to develop the financial industry, the financial markets in Kenya, or the financial sector in totality. And we have seen in a couple of years, we have pulled the economy with us. It is the financial sector that has pulled the economy with us. To support this growth, the central bank, in partnership with the industry players, has continued to initiate reforms and even mainstream microfinance industry. Let me give you some notable examples. First of all, the Amendment of Microfinance Act. It enabled the branding of deposit-taking microfinance institutions into microfinance banks. By the way, I oppose this myself. And I know, because I said, why are we having so many word banks? But in the end, the spirit of trying to be partners, we accepted, let's call them microfinance banks. But I prefer deposit-taking microfinance. But I think you realize that that word is too long, isn't it? So we have come to accept microfinance banks. And that is one of the reforms. Second, we have connected microfinance banks to national payment system through the operation of current, we have allowed them to operate current accounts, open accounts with the central bank, and also participate in the clearing house, and even in real-time gross settlement. And that is where the world is going. And that is also going to allow you to participate in the wider market, like the East African market. If you don't have real-time today, obviously then you can't prosper. Most people ask why mobile phone financial services in Kenya is so efficient and preferred choice of transfers, because it's real-time. So it means that if you participate in real-time settlement or real-time payments, then obviously things will work. And finally, we have empowered microfinance bank to conduct foreign exchange business. And obviously, this is something that we have looked at, and we have to reform the law. The second thing that we have done is to authorize microfinance banks to operate through innovative alternative delivery channels, principally the agency banking and even marketing offices. It was difficult to change the law. I know when I entered the central bank about 8 years ago, even big banks had marketing offices, and the law could not allow that. Through any form of interpretation, however flexible we tried to make it, in the end, we had to reform the law. Now, we have agents across. I know even microfinance themselves told me that you cannot start agency banking because they are going to kill microfinance. And I told them that you cannot hold a reform like this. You can also be agents of banks, and you're also free to appoint your own agents. Today, nobody is complaining. We have 1,400 branches of banks and about 97 branches of microfinance. But how many agents have we developed in the last 3 years? Of slightly over 33,000, slightly over 33,000 agents. And microfinance have even a larger number of marketing agents. So essentially what you are really doing is that you have to cover that ecosystem cost effectively. And the only way to cover that is not through fixed investments of branch outlets, which require some specific standards, but you can have agents. And agents can be anyone, the shopkeeper, the filling station. So it's up to you to check. And the principal agent model has been with us, mankind, for over time. It actually helps us, as central bank, to supervise the market, because it is your responsibility to supervise your agent as the principal. And then it helps us to work with them. And finally, extension of credit information sharing mechanism is very, very important. For us, we looked at it in terms of creating information capital so that we can change the collateral technology in use in the country. And this is something that we have really worked on. I remember I was in an international forum where I argued that we can actually come up with different templates using the information capital. And Jared Getenga in KSMS is reading the way. There's his back there. We can have different templates in terms of how you rate your customers, in terms of how you rate the institutions, and in terms of even how you rate the banks in terms of the customer quality they have. So we can actually use information capital for so many things. But the most important thing is that if we change the collateral technology and use that today in this country, then we are going to bring down the cost of credit. And everybody can stand and tell you what the process you have to go through to perfect your collateral, isn't it? I was presented that study about 3 years ago to the Treasury. They were really astounded by the cost you have to undergo. But we can deal with it if we come up with alternative collateral processing mechanism, or what I call in general collateral technology. So, ladies and gentlemen, the journey has not been without challenges. It has been a very befitting or benefiting journey. But let me say that the microfinance banks have taken quite some time, but they have taken a momentum to grow. So we are very happy. They are very, very important deposit mobilizers. You know, when I joined the central bank, I started looking at, from my background, I ask questions and I also look at the numbers. One of the things I looked at was, why do we complain about lending rates? Who borrows? At that time, I asked my colleagues, let me see the number of loan accounts. There are about 700,000 loan accounts. Let me see the deposit accounts. There were just about 3.2 million deposit accounts, and said, now who borrows in this country? A population of slightly more than 25 million adults, only about 700,000 accounts. You can see that there was a limitation in terms of how you can mobilize funds. Today, we boast of having slightly over 25 million deposit accounts and slightly over close to 4 million loans and advances account. So if you have so many people borrowing, then you can spread your unit cost across. Then it means that you can talk about unit cost is coming down. But if it's only a few people who are borrowing, you're spreading that cost to a very small number. And that's why we have seen the difference in terms of how we have mobilized. Similarly, that is what microfinance banks are doing. They have come up and they continue to rely. They have stopped relying on credit lines. The traditional credit-only microfinance was not going to build the market. But we have seen that mobilizing microfinance banks have a way of creating or enhancing their future capacity, because they are going to collect deposits and serve for 90 at a better rate. At a broader level, the microfinance banking industry is going to be a pivot in terms of playing the development blueprint, even what is envisaged in the Vision 2030. That is, Kenya's financial sector should be globally competitive, and it should mobilize domestic resources to finance the development projects that we have, including financing those micro projects that come to from individuals. And that's why I'm applauding Daraja Microfinance Bank for actually choosing a peri-urban area to serve, because they know what is required. These are areas that have mountains of savings. Those savings take place through rotating circles. Those savings come through chamas, but they are out there with the individuals because they don't have a safe haven or a safe haven to deposit them, or they don't have a closer partner they can trust. For you coming in here, you are going to draw these savings into the formal financial system, and they will be critical in mobilizing resources that are required to finance micro and small enterprises, as well as projects that we see around. Your choice of Dagoretti is bustling peri-urban suburb of Nairobi, and so it is actually spot on. I'm sure you will provide a variety of competition to the financial services proposition of the residents of Dagoretti as a target area. But the future itself, and we know that's where we started devolution, was to create growth poles across counties. I'm sure, of course, we have been impatient in terms of whether we are seeing those growth poles, but the potential is there. It's a question of asking yourself, what kind of instruments are you going to ignite or to use to create these growth poles? But it doesn't happen en masse. It's not a wholesale market. It is a targeted market. You have to target that market. And that's why Daraja Microfinance is a case in point. It's a case in point because they're going to collect deposits. They're going to finance developments in this area for those who are interested in them. And they are going to show that you can work even at the county level. In closing, ladies and gentlemen, the financial sector is critical in the ongoing transformation in Kenya. It is through the financial sector that we have recorded significant successes so far. It is through our innovations in the financial market that we have become recognized all over the world in terms of our financial inclusion initiatives. We participate in several networks, and one of them that we started in Kenya is Alliance for Financial Inclusion. It is one that shows that you can actually come together globally in Africa, Asia, and Latin America to share policy solutions that have worked. We have pioneered this. We have shared our mobile phone financial services. We borrowed agency banking from Brazil and Colombia, and we have shared it across Africa. And it is because of those innovations or policy solutions that have worked, we are encouraging also businesses like Daraja Microfinance to target specific areas in terms of physical location, but also specific market niches like micro and small enterprises. This is where the growth poles are. So Daraja has an important role to play here. I know for the residents of this area, even others who come from far, you're not limited in terms of coming to open your accounts here. And also you're not limited in terms of borrowing from this area. And I'm sure you will power Kenya's takeoff to improve the quality of lives. I'm sure I've made a lot of remarks, but I'm sure you know that it's my passion for financial development. Financial inclusion and financial development is my passion. Because I know that you cannot actually have, should I say, efficient monetary policy if you don't have developed financial market. So like you cannot have one and leave the other. You cannot have an efficient and effective payment system without the transmitters of those financial payment systems. That is the financial units. That's why we are excited that we have community-based Daraja Microfinance. We can call upon it in terms of looking at what has happened to Dagoretti, this peri-urban area. So I'm happy about that. I'm encouraged, and we continue in the central bank to give you adequate and optimal support as you require it in terms of developing this market further. Having said so much, it is my distinct honor to declare Daraja Microfinance Bank officially opened, and thank you very much. God bless you.